Hi there, folks, and welcome to our Monday market review held by yours truly, Ian Giffen, on behalf of the GoPro Trading Academy. Folks, I have to say things are very quiet for us at the moment. I hope that you're exercising your ability to sit on your hands and do nothing. The markets have gone pretty dead over more than the last week, I would say. We saw the first signs of it 2 weeks ago, and certainly last week was really very flat for us. Even our lower time frame trading, we've put on pause. And I think, as I mentioned before, this may well be because we're heading into the Northern European and Northern Hemisphere holiday season, and which does generally have an impact, but not necessarily. So we're still keeping our eye on things. If anything were to happen on a global scale and a macroeconomic factor giving the markets a bit of a kick and a boost, obviously we need to be ready to trade. But for many folks, this is a good time of year to take a bit of a breather, or alternatively do what we're going to do, which is a bit of more advanced training. So if you haven't yet joined up for our workshop coming up this week on advanced price action analysis, then please make sure that you do that. There are links with the video and in our Facebook page. So do join up. It's only $10 to attend. So it's going to be for the value that you're getting over there, it's probably the cheapest money that you've ever spent. All right, so starting off with the euro US dollar, you can see that last week was very much a retracement candle. It was a bullish impulse candle on weekly, but you'll notice looking at the daily time frame that for the majority of last week, certainly Wednesday, Thursday, Friday, the market just went sideways, and there's certainly no sign of it doing anything else at the moment either. There was a hint possibly that at the beginning of this week, we'd see the resumption of the next bearish phase one, but it really doesn't look like that is about to happen anytime soon. We'll wait for some confirmation and some bearish impulse candles before we were to look at that again. Having said that, if we get any kind of choppy price action here over the next few days, it will bring this trend to a very abrupt end, and we will be back inside of our HTC channel. Right, so looking at the cable, similar picture, more weakness as we know, but certainly last week's candle closing back inside the HTC channel on the weekly time frame. So that trend still intact but weak. And here you can see a class 2W pattern that formed that candle effectively over the last couple of weeks. So nothing doing for us inside of the channel, no valid patterns. And that really is typical of the story that we're looking at. And you can see here, even on the dollar yen on weekly time frame, just a bearish candle. We've got those rail tracks there over the last couple of weeks, and a class 3M pattern over here. There was some strong bearish days Thursday and Friday, but still very much inside of the channel, and really just saying that the market's taking a bit of a breather. Moving on to our Swiss franc, we know that this has been inside of the channel on the weekly time frame for several months now, and even on the daily time frame, even though do have a class 1M pattern here. I know some folks jumped on that early on Friday morning. It's probably, of the majors and the minors, one of the better instruments, but for those folks who are channel traders, you've ignored this one as well. USD CAD, again, that high test, that inverted hammer that we were talking about a week ago, certainly being confirmed and ringed by last week's bearish candle. So still inside of the channel, that resistance level there very much still intact. And on the daily time frame, likewise, you can see we're inside of that channel. So that's where it tested the weekly resistance level, fell back inside, and you can see it's respecting the support level as well. So nothing doing for us. I would say, in fact, for all of these markets, these are the times where your reversion to the mean time trader actually feels like their existence is worthwhile. But you folks know that we only trade high quality price movement and look to hunt that down. And if there isn't any, we do nothing. Right, Aussie, then you can see another retracement here on the weekly time frame. So very weak trend. In fact, it barely qualifies as a trend. So the fact that we're back inside of the HTC channel as well, meaning that we're not really interested in that. But on the daily time frame, an extended retracement back to our daily 55 EMA, which at the moment, as you can see, is providing some dynamic level of resistance there. But likewise, nothing really for us to do either. The Kiwi, the last of our majors and minors, almost identical picture. Very weak, barely qualifying as a trend over the last month or so. And of course, last week, ringing that low, showing that we are in a retracement wave of this week trend. Class 1W pattern as the market pulls back towards the mean and back towards that 55 EMA. But otherwise, nothing going on there at all. Right, let's look at our yen crosses. Here we have the euro yen very dead again on the weekly time frame. Absolutely nothing to look at. Last week giving us just that inverted hammer candle. And there you can see it just turned around during the course of the week. There was the potential for a class 1W pattern, but Friday's close disqualified that. GBP yen even more dead, as you can see. And on the daily time frame, a similar picture, just additional weakness. Nothing really for us to look at all. Swiss yen, we still have this trend intact at the moment. It's barely hanging on. Last week's candle did have an opportunity to go and confirm this as an impulse wave or phase one wave. It failed to do that as yet. And in fact, it closed as an inverted hammer. Or high test, which doesn't bode very well for what's going on this instrument. And in fact, that wave, as you can see, although it is still intact, and we do have a trade running on this with that hybrid that we got into, is pulling back. So really from Thursday and then Friday, we've seen the market come back on this one. But a little bit better than anything else that we've seen. CAD yen, no trend still, obviously. It did test the resistance level again last week, but fell back again. Let's see if anything else happens this week. But nothing doing for us on this one at all. We did have that false breakout. In fact, it's not yet a false breakout, but we may as well treat it as such because this bullish cyclicity hasn't yet broken down. So remember those folks who have been through all of our academy material, we only treat a trend as coming to an end when cyclicity breaks down. That hasn't yet, but the fact of the matter is it's very weak, both in terms of the cyclicity and being back inside of the HDC channel. Aussie yen, nothing at all really for us on the weekly or the daily time frame. Resistance being respected by that little push in the early part of last week, the end of that impulse wave. Kiwi yen, similar picture, just not quite as aggressive really. You could say that in this one we've got the potential for a class 1W pattern for those folks who trade much more aggressively and ignore the channels. But the fact is it bounced very clearly off the top of the HTC channel. So not looking for that really to go anywhere yet. Remember, we always wait for the market to prove itself. Right, moving on to our Euro crosses. Euro GBP, really completely nothing still for us. We haven't touched this for a long time. Nothing at all last week. Just a bit of a spike there on Thursday. And of all of the instruments, and this very often happens in very dead markets, you have these strange instruments popping up on the radar. Euro Swiss franc, where we continue to see the euro weakness relative to the Swiss franc. Having said that, this low was ringed by last week's candle, even though it was a very distinct high test or inverted hammer. But as you can see, even today, the market is staying very much inside of that range. But of course, that is a weekly candle, and a lot can happen over the next 5 days. Here you can see on the daily time frame how it came down to test that support level. We are very much inside of the HTC channel here. If there was anything you could do on this, you'd need to have a bearish breakout, and it's not looking very promising at all. So I'm expecting that just to fall into line with a bit of a tight range there, fall into line with the rest of the pairs. Euro CAD, still technically in a trend here on the weekly time frame, but obviously a retracement now with the low test of the previous week being ringed and confirmed by last week's, spinning top really. And on the daily time frame, you can see this is just going absolutely sideways. Nothing for us to do there at all. Euro Aussie, completely inside of the HTC. Nothing for us to look at. And you can see on the daily time frame how messy this is. So technically, you could argue that we are outside of that channel, and that is true. It may stack up to be something tradable over the next few days. If we get a close over here outside of the channel, remember that technically it's still a retracement wave, even though I haven't updated the analysis for this yet. But you could potentially start looking at the H4 time frame for a hybrid, see if there's a breakdown and that cyclicity happening there. And the last of the Euro crosses, similar kind of picture to many of these instruments where it's just stuck in the middle and really just a spinning top here for the second week in a row. And really some wild price movement, spiking up, spiking down. That's quite typical of low liquidity periods, and it really looks like that's what we are experiencing at the moment. Right, GBP Swiss here. We're looking at the market still going sideways. This is week number 4. We're into the 5th week now where the market really hasn't done anything. I suppose you could say the 4th week, but it's respecting that support level, and that's very visible here on the daily time frame. Friday it went down to test it. It's bounced off of it again today. GBP CAD, very weak bearish trend here, encroached on the previous phase 2's price territory in that phase 2, as well as the fact that it's just barely managed to get a close on Thursday below the previous impulse waves price territory. So yeah, this is just not really doing much at all. And you can see very clearly here on the daily time frame that there is no bearish cyclicity. Friday giving us that bullish impulse candle that pretty much being confirmed by today. So GBP Aussie, also very little happening, respecting that support level in pretty tightly bounded there with this consolidation area here on the weekly time frame. Weekly, it did come down to the HTC channel support level. Remember, we're using a 13 period HTC channel. If you were to extend that a little bit, you'd notice that our support area clearly is a little bit lower down. So it's quite clear that this market is respecting this general area of support at the moment. We'd have to see something a lot more spectacular than that. Some folks I know are looking out for a class 1 M pattern if you are a more aggressive trader. Right, the last of the GBP crosses here, you can see Gbp Nzd. This is one of the least interesting of our pairs at the moment. You can see on the weekly time frame also clearly in that tight range. And on the daily time frame, very spiky. This has just been a complete mess now for quite some time, going all the way back, I'd say even into April. So not interested in this either, respecting this general support level at the moment as well. Right, so if those aren't really tradable and you're really desperate, you can start looking at the other crosses, if you like. So CAD Swiss, however, also just exhibiting nothing of interest at all. Despite Friday's bearish impulse candle, it's inside the HTC, no valid patterns. Aussie Swiss potential class 1 M pattern on the weekly time frame, but really, would you consider that after effectively almost 2 inside bars over the last couple of weeks? And even then, at the moment, it's in a retracement. Daily time frame, it continues to test this resistance level. We need to wait and see what happens there. So if it does break out of this HTC channel, there are a lot of resistance levels that are going to give it some strong headwinds if we want to see the market go up in a bullish direction. Right, Aussie CAD, also on the weekly time frame, pulled back inside of the HTC channel. So technically, yes, still trending, but in a retracement wave of that trend and pulling back straight into the HTC channel. And you can see that on the daily time frame, it's just gradually moving up. Nothing spectacular, nothing to write home about at all. And the last of the Aussie crosses, you can see on the Aussie Kiwi here last week, just confirming this tightly bound range. And well, that just tells the story, doesn't it, on the daily time frame? Okay, the last 2 of our currency pairs, the Kiwi Swiss, first of all, on a weekly. There is a possibility, obviously, that this might be rolling over and giving us the start of the next bearish phase 1 wave, because we have been in a flat phase 2 here for the last, well, 3 weeks, certainly. So we need to see something spectacular happen this week. But as you can see on the daily time frame, that's not looking very likely, because that flat phase 2 is indeed very, very flat. And finally, Kiwi CAD, last week giving us a bullish impulse candle, but remember also a retracement wave and also pulling us back inside of the HTC channel, not respecting that was support, now resistance level, and back to being support again. So this is really just a very soft market, and the daily time frame again just telling that story very, very clearly. All right, so that's all of our currency pairs. So let's have a quick look at a few other instruments. Gold, you can see on the weekly time frame, we've got a bullish hammer. So on the daily, it's really just showing that there was a breakdown in that bearish cyclicity. So the recovery of the dollar against gold over the last few weeks looks like it's come to an end with that breakdown in cyclicity, and certainly getting a phase 1 followed by a phase 1. So an aggressive reversal over here. Let's see what happens. I'm not betting on anything happening at the moment. Obviously, with all of these markets being so very quiet, it's much more likely that this is just folks taking their profits and getting out of the market and going on holiday. Right, so the indices, surprisingly as well, given that there's quite a lot happening on the global front, have been pretty quiet. So here's the Dow. It did give us a bullish impulse candle. Total breakdown of cyclicity, though, in that previous bearish trend, with last week's candle ringing that preceding low. So this is really just stuck inside of a range on the weekly time frame. We did get, with that bullish move, a bit of a breakout there on the daily time frame. So folks who are looking to trade in these markets on these time frames have moved away from bearish and are now looking more towards taking bullish or buy trades. I wouldn't necessarily go for the Dow, even in fact the S&P 500. They're both reasonably uninteresting. I think some folks, however, are more interested in the fact that here on the Nasdaq, we've had a breakout on the daily time frame from the HTC channel. There looks like there is far more movement on this one compared to those other two. The weekly time frame, though, still nothing doing really. You can see that although technically we've still got a bearish trend, the strength has gone out of it, and it looks like the market's starting to take a breather there as well. But as I say, if we're going to do anything, it would be on the lower time frames and in a bullish direction. Right, so oil on the weekly time frame, nothing interesting there. So we've still got a bit of a reprieve for folks in terms of the price of oil. So making it a little bit easier to afford to live. But yeah, certainly at the moment, it's pretty flat. There's nothing really interesting happening here at all. Where we, as we know already from the previous week, we did see the market attempt to break below the support level, but it failed to do so. It looks like it's failing again today. So we can keep our eye on that and see if the price of oil continues to drop further below that 100 level. Right, and last but not least, Bitcoin on the weekly time frame now has in fact brought that bearish move to an end. The cyclicity has broken down. So obviously we know that when a trend comes to an end, we've got the 3 R's, and we always assume range at first. So it may well presage the start of a bit of a recovery for Bitcoin. We've been pretty firmly above the 20,000 level now over the last while, after testing below that level, obviously the preceding week. So you can see on the daily time frame, however, that it has in fact managed to break outside of the HTC level, certainly the resistance level, and the market has moved above that through the course of last week. But now we need to wait and see if that support level is going to be respected. Of course, we also know that from an Elliottian's point of view, that first retracement wave, if it is going to be a strong trend, is often quite an aggressive pullback, averaging at about the 618 level. Well, folks, that's pretty much it. As I say, at the moment, really, it's just about having a breather, letting the markets do that, and allowing the folks in the Northern Hemisphere have a good holiday. So you have the choice of doing that yourself. But as I say, if you want to join us this week for some advanced price action trading, where we're going to jump into more detailed ways of looking at the markets just using price action and price action tools, then make sure to click on one of the links we've got on our Facebook page at the Convex Trader. And if you're watching this on YouTube, there should be a link below this as well. All right, so if you've got any questions, though, please make sure that you pop them into the comments. And if you're enjoying our material, remember to follow our page, follow the channel, make sure you're subscribed and hit that notifications bell. All right, folks, for the rest of you, I will see you for the training later in the week. Bye for now.